So the topic of this panel is ESG in emerging markets. Over 3/4 of the global population live in emerging markets, and that's a figure that's only expected to increase. Despite accounting for such a large chunk of the population, emerging markets are responsible for just a third of global emissions. That profile is fast changing, however, and this group of countries is likely to make or break whether or not the world achieves the Paris Agreement target of limiting global warming to 1.5 degrees. So the case for ESG is clear, but what's harder is adopting an investment strategy along those lines. Data is often in short supply or patchy, investor engagement with corporates can be challenging, and environmental, social and government factors can be weaker, or at least rated weaker, than in developed markets. And we're joined today by two people who, each in their own way, are at the forefront of these pressures and actions to address them. Welcome to you both.
Thank you.
Habiba, I'd like to start with you. You've expressed frustration that what's embedded in terms of ESG at a company's headquarter level often doesn't filter down to the regions, particularly in the Middle East where you're based. What can be done to address this? What are you seeing through Emirates Environmental Group, and how can investors help?
Thank you very much, Natasha. I would like to mention here that I started the first environmental NGO in the United Arab Emirates in 1991, and I have been pushing the agenda of environmental protection and sustainability amongst the different sectors of the society. So, of course, one of our most important partner is the private sector, and we have been working with them for decades now. And it has become for me clearer and clearer when I'm dealing with multinational organizations. You have a beautiful set of laws, regulations, everything that guides organizations, very well structured, but it is not cascading to every part and to every region, particularly to our region. For example, when I started corporate social responsibility and rolled it out as an independent platform in 2004, many of the multinationals were not a stranger to that concept, and they were implementing it. So my question is, when this is something that was part and parcel of what you are doing, yet it is something very new, why wouldn't this have come to us much earlier to enable us to put our houses in order and to enable the businesses and the academia and everybody to incorporate it so that it becomes a normal norm and becomes mainstreamed? And the answer I got that we don't have the right laws and regulations. And again, I always say that the private sector is a beautiful and dynamic sector, and it's the dynamo that makes any economy of any country move. So the leadership that lies within the private sector has to be harnessed and has to be brought, regardless of whether you have the laws or you do not have the laws, particularly in the Gulf countries when all of it is new. Where would we get those laws? So it's evolving as we evolved. And the maturity of these laws will come through practice and through learning and through sharing best practices that we get from the multinational organizations. So yes, it is very frustrating. Another point that I would like to mention here is 90% of the businesses, particularly in the UAE, are SMEs. Okay, so they need that guidance, we need that support, and we need the maturity that is there in the global market to be brought to us so that we can get from it the best practices and roll it out to fit us, to fit our culture, to fit our requirements, our priorities.
Yeah, okay, and you mentioned just before we joined today that, so just now you mentioned laws, but before you mentioned voluntary standards and how these voluntary standards that have evolved, for example, out of Europe and the US, have criteria that just simply aren't applicable where you're based. Could you share a few more examples of those?
Yes, I can share with you. In 2006, I co-founded Emirates Green Building Council, and it was number 8 in the world and the first in the Arab region. And it was a completely new issue that we were bringing on the table. Why did we push that agenda? Because UAE was witnessing an unprecedented growth in the built environment, scale, speed, and all the big investors, all the architects from all over the world were coming to our country. So we need to ensure that we are doing it correctly, and there is a lot of buy-in from entities, from the developers want to know what is the right thing, what is out there on the global level. So we looked at what are the criterias, what are the rating systems that are out there. One of them was the LEED rating system from the US. You have BREEAM, and you have Hong Kong, and you have so many others. The marketing of LEED was very successful, and majority of the entities opted for taking LEED, actually. But then when you look at the requirements of LEED, not all of it fit us. And this is an issue that we pushed more and more to say that these are issues that do not fit our market. Weather conditions are different. You know, for us, water in the Gulf countries is the top issue. But that is not the case in Europe and US. Carbon emission is a priority issue. I'm not saying that it is not for us, but for us, water is more important. You have transportation systems. We have cultural norms that are different. We have our weather condition when it's at 52 degrees centigrade. You do not expect people to be on the bicycles, on everything. Yet you are required to put parking spaces in front of the buildings or in front of places that have been rated as LEED Platinum. Yet entities have to fulfill those requirements, otherwise they don't get that certification. And because they want to be seen and they want to actually comply with international requirements, that they go for that. I have another issue. I was very actively involved in GRI and in sustainability reporting. We introduced sustainability reporting in the country from the mid-2000. Again, there are quite a few things that Europe and US is far more advanced, but we would not expect that immediately to be implemented on the same level and the same maturity in our part of the world. So it becomes very tasking for entities, even if they want to implement it and to do it correctly. As I mentioned, 90% are small and medium-sized enterprises, so financial resources will be very big for them. The technical capacity, the knowledge that they need to ensure that, then they will shy away from issuing sustainability report. In spite of that, we have pushed and really encouraged and built the capacity to encourage organization. I did that through Arabia CSR Awards. To give entities extra points if they issue sustainability reports. And I remember when I first rolled it in year 2008, there was not even one entity that had sustainability report. Today, mashallah, you know, there are quite a few that issue sustainability reports.
So it's spurring progress, but there's still some problems with the kind of tick box approach that isn't necessarily applicable. And Burak, your focus is on attracting foreign investment into companies in Turkey, which has lagged from a peak in 2007. To what extent are these kind of factors playing a role here? Like, are you feeling pressure from foreign investors when it comes to investing in Turkey around ESG factors? How is it channeling through to where you're sitting?
Good afternoon, everybody. So I had the opportunity to join Singapore edition of this very similar meeting, and I'm really pleased to be here today with you to share the experience of Turkey. As you said, we compete with other countries, especially Central and Eastern European countries, to win FDI foreign direct investment projects. And I've been with the organization, 15 years, and when I compare with, the very early days of my, work here, I can clearly see that the investment rational decisions are based more and more on the SDG-related principles, and especially in emerging markets, ESG is important, but environment is having a kind of more priority role, and we can clearly see that those companies would like to invest in countries where they can practice, those principles, and we can, say that easily the competition in that field, the competitive advantage come from the countries' adaptability to the ESG, or depending on the environmental, depending on the perspective of the environmental issues. So the very frequently questions that we get is, can I procure renewable energy from the grid? So in Turkey, yeah, you can do that. We have a free, very liberal energy market. We have an energy exchange platform. Then companies can certificate that this IREC certificate that they use renewable energy. Or a very important issue is to decarbonize the whole supply chain, especially on the logistics and etc. And for companies operating in Turkey, it is easier for them, compared with some other emerging markets. So we have to, define the competition zone accordingly. So if you look at the country, this is a hub for a wider region. When multinationals take investment decision, they do not just focus on the domestic market. It is important for them to, to access to the other markets. And if you look at the export composition of Turkey, more than half is to Europe, UK, and United States. So this is the sophisticated market, for the client, let's say, preferences. So for the client base, for the supply chain dynamics and the shareholder of those companies, and for the local regulation perspective, yeah, ESG matters. And it has a very, serious impact on the decision making. Maybe one good example, one of the FMCG companies were doing a kind of a site selection study in the region, wider region, and we were trying to get the project to Turkey. And at that time, I was junior, and I'm talking about 2013. So we proposed them some, locations, sites, and in some of them they were getting higher incentive because of the regional development disparities. And I remember that they were ruling out some options which are more, offering more incentive, because they were saying that this is not in line with our sustainability principles. So we have to lower the carbon because of the suppliers, because of the target market, this and that. So even on those 10 years ago, for multinationals, sustainability principles were shaping their investment decisions. So yeah, in the next years we will feel it more and more.
And it's carbon, it's the environmental that you're feeling the pressure on.
The first priority is on the environmental side, because the CBAM will be in effect by 2026. And the countries, which are more ready to, those CBAM regulations and etc., are having more opportunity to win such projects.
And the renewable energy plays a big part in Turkey's energy mix, but I think you've also got the largest third largest coal pipeline possibly in the world, and the country's climate plan has been judged quite poorly by Climate Action Tracker, which is a kind of independent assessment platform. So what is the government doing to advance there? And is there a role that investors can play? For example, we've seen in Southeast Asia raising investment for early retirement of coal plants and through carbon credits, for example. Are you exploring those kinds of options?
Actually, we have to understand those countries within a certain context. So, and if you compare Turkey among those emerging markets, our share of renewables is definitely higher than many of them. Currently, we have installed capacity, generation capacity around 107 gigawatts. 55% comes from renewables. And our investment strategy has been focusing on renewables since 2006. So, and for example, by the year 2035, the share of renewables will be more than 65%. So, I think we are committed. There can be negative judgments, so I can respect them. But I think we are on the right track to develop the renewable. And this is not just the generation. Turkey is one of the largest renewable equipment manufacturing generation in ecosystem in Europe. We have multinationals, we have local suppliers, so Turkey also developed this capability to manufacture the equipment. This is much more important. So we have to, as I said, understand these within the same competition geography, and we compare us with Central and Eastern European countries. Our program is working well, and we are committed to that. So coming back to maybe the carbon exchange mechanism, as I said, we have an energy exchange. And soon, hopefully, we are waiting for a legislation on that. We respect the parliament. And when it is the right time, the legislation will pass, and we will have an active carbon trading mechanism in country as well, emission trading system.
The emissions.
Yeah.
And will carbon offset credits be allowed in the emissions trading system, or will that be purely?
Yeah, most probably. So after the legal, changes, we will see that. But the plan is to have it.
Okay. And Habiba, just wanted to come back quickly on the comment that you made about 90% of companies in the Gulf region being small and medium-sized enterprises, and you also mentioned that many are family-owned. How is that dimension playing into the ability of them to adapt to ESG, ever-evolving ESG norms, and how is Emirates Environmental Group helping in that sense?
That's a very important point that I would like to focus on. Thank you very much, Natasha, for bringing it. Again, you look at ESG governance structure. When you look at family businesses, it's a different set of structure that is governing. But it does not mean that it is not a proper way. But it doesn't fit that size. But then these businesses are sustainable because they have managed to sustain themselves for four generations. It means that they have a proper governance structure, transparency, responsibility to move from one generation to the other with profitability, with growth, with scalability. So this is one of the issues that has been tackled. But when you come to issue of ESG, you have boxes that you tick, which, in my opinion, sometimes that will push companies to look at short term. I fulfill this, I fulfill that, but what about the long term? And what about the innovation? It's so rigid. Let's look, for example, we have solar panels, and UAE today has got the 3 largest solar parks in the world. And we have developed solar panels that are resistant to sand, pollution and maintenance and all that. And it's beautiful, and it is. But there is nowhere that will show in the requirement of ESG. So then you are stifling really the innovation part. And then companies will be focusing on the short term because I show that I am reducing my CO2 emission, and yes, they will be doing very good. But then when you are not encouraging them to install or put solar panels in their own operations, which is a much longer process, and it will require a very good investment up front, then you are really losing the game, I believe, for these SMEs. You look at the cultural aspect of it, when you look at ESG, it is a straightforward thing, but then you have in societies like our part of the world, culture is really a very strong part of our daily life and our development, and that you do not see it at all in this kind of global requirements that are coming. So I'm saying one size does not fit all. We need to look at different regions, and we need to adopt and adapt to fit the requirement of that particular region.
Yeah.
You look at retrofitting, for example. Retrofitting requires a good investment up front. Okay? But then if there is no incentive, if there is no support from the financial institutions to really support entities to go into that, why would small developers think of going into this retrofitting? And it is nowhere to show in the ESG the importance of this aspect. So while it is very good, you measure, and it is helping, and many organizations around the world, I'm saying that this is not the only template, that we need to look at this in a more critical manner and develop things that fit the emerging markets.
Yeah. Okay, we've just got a couple of minutes left. I just wanted to see if there were any questions from the audience. Okay, Burak, you mentioned a carbon border adjustment mechanism, this carbon tax that's being set up on the EU border. How is that impacting the competitiveness of your private sector, and what are some concrete examples of changes that are being made to adapt?
So all the public policy is actually to encourage those companies, businesses, both Turkish companies and international companies, to adapt to the ESG compliance. Because this is obviously happening, and it is important, and public funds are available to the investors. Just as an example, recently there are different scales. For the corporate structures, we announced a kind of new financing mechanism, a credit mechanism, that they are going to access to financing with a lower interest rate. And the heavy weight is coming from the environmental side. They have a complex metrics to analyze the projects or measure the projects. So it comes from there. Another important mechanism, I think this is related to family businesses as well, SMEs. There must be some motivation, a factor to push them. So as I said, in Turkey, many of those businesses, even the SMEs are, I'm not talking about those cafes, restaurants, but those manufacturing or some services serving to the manufacturing industries. Since they are a part of the global value chain, either it can be an international OEM or it can be a Turkish OEM, they encourage or push those companies to, be ESG compliant. Because of CBAM. So both the public policies and the policies of the private sector is to encourage companies to have this transformation. So we see that we are not lagging behind, and actually in some industries we are ahead of the competition, like automotive. There is a big transformation in the automotive industry, electrification and etc. So we are even ahead of some in some verticals we are ahead of the competition. And maybe one last minute. Today, I had many, feedback, insights about the businesses and etc. And one of the important things was about data, traceability, reporting, and etc. And I think we have to count on those technology startups, who are digitalizing these, reporting mechanism or the measure mechanism. And in Turkey, we see a number of, entrepreneurs establishing startups for ESG reporting or the environmental reporting. I think in line with the digitalization and with the support of those startups, even SMEs can join this club with a minor cost, let's say, compared to those huge costs.
Yeah, and perhaps bridge that gap that Habiba was talking about around the metrics and measurement that doesn't quite fit.
I always believe in technology, so digitalization helps a lot.
Yeah, okay. Well, thank you both. We're at time. Thanks very much for joining us today, and thank you for listening, everybody.
Thanks for having us.